What's up everybody, welcome back to Cilinix Crypto and welcome to a new trading education video. Felt like it was time for it. I haven't done one of these in quite some time. Normally in this period of time I make some sort of a middle of the day market update. But right now on a Saturday there's not much to cover. So I might just make one of these videos every Saturday. Let me know if you'd be interested in that. But in this video we are going to be talking about how to spot some sort of a reversal, how to spot a turnaround in the price, because a reversal usually is from an uptrend to a downtrend, right? I mean, that's quite hard to catch. But we'll talk about divergences, right? So a divergence, probably if you look it up in some sort of a dictionary, what you'll find is that it's where basically you have two things that diverge from one another, all right? So they kind of tend to grow away from one another for the lack of better words. So in crypto, what that means, or at least the thing we will talk about, is you have tons of divergences, all right? You can use tons of indicators, etc., to spot divergences. But the one we will be talking about is a divergence between the price. Very easy. You can track that very, very easily on tradingview.com, for example. That's not sponsored, but that is just the best website to use. And there you can also find a free indicator, which is called the RSI divergence indicator, because the other indicator we'll use next to the price is the RSI, or the relative strength index, which you don't necessarily need to know what that tracks. Just listen to the name. It's basically using an index to find the relative strength of a crypto in a certain period of time, and also the flow of how that goes. So we'll be talking about that, all right? Because what you can do is then, if you have a bullish divergence or a bearish divergence, we'll get to that a little bit later in the video on how to actually use that. But you can use that to spot some sort of a turnaround in the price. So for example, if the price is going up and it's going up and you get a bearish divergence, that might be a good area to short. If the price is going down and you get a bullish divergence, that's a good area to potentially go long. So a couple of things, like I said, tradingview.com, just look up a crypto, then you have the price, and look up the RSI divergence indicator. Now this indicator, does not work 100% well. You can see, like sometimes you can actually see a bearish divergence. So for example, right here it says, all right, bearish divergence, and that's true. There is a bearish divergence here. And the price actually dropped down, so it worked very, very well. The same actually happened last week, or last week Friday. We got a bearish divergence and the price dropped down. So it does work, but sometimes it also doesn't show divergences even though they are there. So in theory, what a divergence is that the price goes one way, so either up or down, and the RSI goes another way. So for that you use tops or lows. So for example, you can see this is a top, 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 this is a bottom, this is a bottom, this is a bottom, this is a bottom. And then you can draw lines between those tops, between those bottoms, to find out where the price is going. And then you can do the same thing with the RSI. And what you're looking for is a moment where the price is going up and the RSI is going down, or the price is going down and the RSI is going up. Those are the two main divergences, all right? Because if the, these are the most common ones, that the price goes up, but the RSI goes down. So what that means is that the price is still going up, but the relative strength is dropping. So there's a divergence, and that is bearish, all right? Because the price is going up, which is great. You think, hey, that's bullish, but with less relative strength. So then it's more likely that the price will reverse and fill that imbalance. And the same thing, if you look at the bottoms, if you see that the price is going down, but the relative strength index, and we'll get to this in a moment, is going up, that means that, all right, well, the price is going down, so you think that's bearish, but the relative strength actually increases. So then the chance of some sort of a turnaround increases as well. So if you look at the chart right here, a couple of examples before we actually get into other cryptos and we look for examples. You can see that the price here makes a higher high while the RSI makes lower lows. So that's a bearish divergence. Price is still going up, but the relative strength is dropping down, so it's more likely that we'll get some sort of a turnaround or some sort of a pullback. Now, if you go back in time, I would love to find some sort of a bullish divergence. It says there's a bullish divergence right here, which is true. Here you can see the price is making lower lows and the RSI is making a higher high right here. So that's a bullish divergence. So then it's more likely that we will go up. Now, what you need to know before we actually look for these patterns in cryptos right now, before the reversals actually happen, is that this doesn't only work on its own. All right, a lot of the divergences are not tradable. Like, so a lot of the times you get a bearish divergence, even though it seems to be working all the time here. But a lot of the times you get a bearish divergence and we just go up afterwards. You need to use other technicals and other techniques next to this to actually make it work. So for example, if we get a bullish divergence and we just hit a significant support level, or we just hit the 200 EMA, or we just hit a significant trend line, then it is more likely that that bullish divergence is actually valid. It's always valid, but that it actually works. So if we look at some cryptos, like I'm just going to, and like I said, hopefully I said this before, but I think the daily time frame to use this is the best. You can do it on all time frames, and I do use it on multiple time frames as well, but the higher the time frame, the higher the actual strike rate. So if we look at something like, some cryptos I'm looking at right now, not sure if I can find one, but this is Ton. I don't really see anything there. Maybe something. No, that's not really working. Maybe with Filecoin here. Let me see. All right, so we're just testing out some things. I believe on Token I actually found one. So for this, I'm going to break the rule I just gave you. But for this, I wanted to get into the 4-hour time frame. Because no, this is not a divergence I saw. I'm not sure which divergence I actually saw somewhere. But let me just quickly look through some others. Okay, I found two, one of which I think will not work, and another one which I do think will work. But just wanted to find, I didn't want to look them up while you still had to wait. So this is on the 4-hour time frame. First of all, BNB, or the Binance coin. What you can see with the price is that we're making lower lows right here, while the RSI is making higher lows. And again, you can see that the indicator actually didn't see this. All right, so that's why the indicator is good to have, but doesn't always work. So this is a bullish divergence. All right, price goes down, RSI relative strength is going up. So why do I think that this is not takeable? For the sole reason that if you look at the daily time frame, you can see a significant resistance here. All right, so if you would go long here, what that means is that that would be your price target. So then you need a very tight stop loss. The risk reward is very bad. So personally, what I would love to see here is if we, for example, break above 625. Because if we break above that, we have a significant key level breakout together with a bullish divergence. So that's what I mean, all right? A bullish divergence is not buy this right now. It's, all right, this is interesting. Let me see if I can find more. And the same kind of with Phantom, but with Phantom, I am a little bit more inclined to call this interesting. You can see the price is making lower lows here. You can even say something like this, like lower lows for real. And then you can see a higher lows formation with the RSI. And here you can see that the indicator is giving off signals. So that's a bullish divergence. Now then you zoom out to the daily time frame and you can see we are actually at a significant support level here at 62 cents. So then it gets more interesting. Right? You have a significant support level, a bullish divergence, and now in the case of Phantom, I would love to wait for some sort of a breakout above the 200 EMA at 63.5 cents. If you do that, you have 3 confirmations And that could be a good trade, but that's essentially what you're looking for. All right, so spot those divergences to find something interesting, and then keep looking for other interesting things, and also look for things in the other direction which go against what you would like to see. And that way you can actually find great trade setups using these divergences. So that's what I think you need to know. For now, if you do have any questions, let me know down in the comments. But for now, thank you for watching. Take care and bye.